India's Oil Minister Hardeep Singh Puri, the day he resumed office under the new government, announced plans to bring petroleum products, namely petrol, diesel, and natural gas, under the GST. This generated a lot of debate and discussion. What it is all about, this and more in the latest episode of Energonomics. Why is there so much debate and discussion on bringing petroleum products under GST? What is the whole politics about? The Indian Finance Minister Nirmala Sitharaman, being asked about it on June 22nd after the GST Council meeting, said, "At the moment, the intention of the GST, as it was brought in by former Finance Minister Arun Jaitley, is to have the petrol and diesel in GST. It is up to the states to decide and come together and get petrol and diesel into GST." Before we debate any further on what GST is all about, I went ahead and spoke to some of my colleagues in and around as to what their take was on fuel prices, and hear them out.
Fuel prices in Bombay have gone up about 24-25% from the lows that we saw in 2020. So definitely they have come off the highs that we saw in 2022 when petrol price was around about 120 rupees per litre. And recently the Maharashtra government has slashed the VAT and on petrol and diesel so that diesel is cheaper by 2 rupees per litre and petrol is cheaper by 65 paise per litre. But still, fuel accounts for a large part of our household expenses. My office is around about 35 kilometers from my home, and if I make the commute every day, it is going to cost me quite a bit, especially the fuel burn that happens in the stop and go traffic. So even if I take a Uber or an Ola, sometimes I find myself that I pay around about 900 rupees or even 1,000 rupees to make the commute. So it is expensive and fuel is costing quite a bit, and I hope that when GST comes, it will result in some rationalization in the prices.
Any increase in fuel costs has an inflationary effect on the economy as it results in higher prices for goods and services. Consumers have to bear the brunt of such fuel price increase as producers often tend to pass on the costs. While an incremental increase may not have a significant impact, a sustained increase in fuel prices over a period will definitely pinch the consumer pockets. In the recent year, the dependency of Indian farming systems on fossil fuels has been going up with the increased pace of mechanization. And in such a scenario, any fuel price increase will result in higher input costs for the farmers, whereas the realizations are linked to the market dynamics of demand supply, adding to the monthly budgets of the consumers.
On an average, I travel around 50 to 60 kilometers to and fro to office and for my sales calls. I've been looking into the fuel prices in the last few years. I've noticed there was a steep increase in the last couple of years. Then I started budgeting that. That was making some kind of an impact on my overall monthly budget. So even if I take an average of around 10 kilometers, which my four-wheeler gives, on an average I'm spending around, even if I take 10 rupees as an increase in the fuel price, on an average I'm spending around 2,000 rupees a month extra additionally on my fuel, which I started noticing a couple of years back. This 2,000 rupees is making a small dent into my monthly budget. Now, even if I look the other way around, if I could save this 2,000 rupees into a systematic investment plan, I could have made a portfolio of maybe around 4 to 5 lakhs in the last 5 or 6 years.
You just heard what the consumers had to say. How exactly is the fuel pricing work? What is the element of tax in it? I asked my colleague Shishir Sinha to explain, and this is what Shishir said.
First of all, we need to understand that when we talk about retail sales price of petrol and diesel, there are multiple components, as you rightly mentioned about the refinery gate price and all those things. For a consumer, what are the components? First is, of course, the price, what we call as the basic price. Then we have the freight charges. Then we have the central excise duty. Then we have the dealer's margin. And then we have the state VAT or sales tax. And finally, we have the retail sales price. So these are some of the components when we talk about the price for a consumer. Now, when we talk about the price for a consumer, we need to understand two basic taxation. One is, of course, the central excise duty, and the other one is the sales tax. And even in the central excise duty, there are four components. One is the basic excise duty. Then we have the special additional excise duty, AIDC, or what we call as the Agriculture Infrastructure Development Cess. And finally, we have the Road Infrastructure Cess, which is RIC. So out of these four components, whenever the government announces any kind of reduction, they do not do anything with the basic excise duty. They make changes in the other three components, which is the cess one. Now, we also need to understand that when we talk about the state taxation, it is tax on tax. Because when the state government is levying tax, that tax is levied on the basic price, freight, central excise duty, combined of these three, and then finally the dealer margin. So four are added and it is levied by the state government. The other thing which we need to understand that the central government levies tax at what we call as the specific rate. That means whatsoever the price, the basic price is there, it will levy 19 rupees 90 paise only. But when we talk about 28 states and the 8 union territories, they have what we call as the ad valorem taxation, which is the percentage of the value. So, for example, in Delhi, it could be 20%. In Rajasthan, it could be, say, 35% or 30%. In Madhya Pradesh, there will be different percentages. Some of the states are making a combination, both ad valorem plus the specific rate. So taxation is a very, what we feel that it's a very complicated thing. It's not so easy to say. And if you go by each of the component and the calculation methodology, for a retail consumer, it is very difficult to find the nuances of all those things. But at the end of the day, if somebody asks that how much tax you are paying, so if we take the retail sales price and the basic price, that will comes around something of 63% in terms of petrol and around 54% in terms of diesel.
I asked Shishir, how does GST work? What is it all about? And this is what Shishir said.
So if we take the rate on petrol and diesel, I mean, I'm just taking Delhi as an example because that is considered as the benchmark. So if we take that rate, it is 63% on the petrol and 54%, around 54% on the diesel, total tax rate. Under the GST regime, maximum rate of tax can be 50%, 28% basic rate and 22% cess. So if we consider a kind of situation, if we just go for a hypothetical situation that both center and states are ready to impose GST on that. That means they have to forego 14% in terms of petrol and 4% in terms of diesel. And I'm just taking this 14 and 4% at a situation when there is a no price revision for a number of months. I mean, the last was one in the month of March, just before the election, when the center asked, technically speaking, petroleum oil marketing companies are free to determine the prices, but what is the real situation, we all know very well. So center asked them and they cut down the prices. So that was the reduction in the basic price. But before that, last year, the cut was 2 rupees in terms of the duty structure. Now, if we take the current rate of taxation, that is a 63% and 54%. The maximum rate is 50%. The basic concept of GST is the R&R, revenue neutral rate. Why this revenue neutral rate concept of revenue neutral rate is there? That when the GST rate is determined, neither center nor state lose money on account of the new rates. So if we go by the 63% and brought it down to 50%, both center and states are going to lose money. So that is the basic economic principle behind not bringing under them. Now, coming to your specific question, whether that will go cheaper, I don't think so, because when you are talking about bringing it down to from 63% to 50%, there will be some avenues like that has happened in case of tobacco. So tobacco is part of GST, but there is a special provision which says the center can levy tax over and above the GST. So you have the ways available to levy tax over and above the GST rate. So in that situation, will it become cheaper? I have a doubt.
What one also needs to understand is why this opposition is happening and who is at an advantageous position. Are the states at an advantage, or is the center at an advantage if the products are brought under GST? Hear Shishir out.
First of all, we need to understand one thing, that under the 101st Constitution Amendment, alcohol was constitutionally debarred. Crude oil, ATF, and the natural gas, they all are part of the GST. The only thing is that if we go by the Section 12, subsection 5 of the 101st Constitution Amendment Act, it very clearly says that the GST Council will decide the date and the rate of. They haven't mentioned date, but they have mentioned the date. Now, coming to your basic question, is it a political consideration or is it an economic consideration? We always talk about that states are earning. Let me also add that the center is also earning a good amount of that. So it is almost around 2.5 lakh crore, 3 lakh crore rupees for the central government. So neither the central nor the states are ready to forego this kind of revenue. And both have their own compulsion. The states are in a slightly better position because when the center earns the central excise duty, and part of the basic excise duty is given to the state as part of the devolution formula. So states are also getting part of what the center is earning. Still, since the states have a very limited source of income after the introduction of GST, so if we go by the state budget, they have the tax revenue, they have their own tax revenue, and in the own tax revenue, one is from the alcohol and the another one is from the petrol and diesel. So that is one of the basic reasons to fulfill their political aspiration, to fulfill their populism. They cannot let forego this kind of revenue because they have to spend a lot of amount on those things. I mean, if you take the election promises in some of the states like Karnataka or in state like Punjab, they have to pay a lot of amount, and still they are facing a lot of problem because they don't have money.
My detailed conversation with Shishir is available in the link below. Working out a GST rate for petrol, diesel, and other petroleum products cannot happen with a snap of a finger. A lot of consultations, debate, and discussion is required. Besides, one thing is clear, that bringing them under GST won't really bring down the cost of the fuel. So what are we looking at? At present, what we are looking at is a comfortable fuel price, be it through GST or the existing structure. This is all we have in this episode of Energonomics. Thank you.